Welcome to Wales Institute of Science, Technology and Advanced Studies BCom online degree program. Course name Corporate Accounting 1, Block 5. Alteration of share capital and internal reconstruction, Unit 15 to 17. Meaning of alteration of share capital and internal reconstruction. Alteration of share capital means alter the structures of share capital is called as alteration of share capital. It may be increased or decreased. For example, face value of rupees 10 each. Whether the shares were increased value, it is increased. Suppose if decrease, for example 8 rupees reduced by rupees 2, reduced by rupees 2 or reduced to 2 rupees 8 each. So this is known as alteration of share capital. This alteration is two types. Alterations does not record the approval of a court of law. Alteration does not record the approval of a court of law. Alteration record the prior approval of a court of law. There are two types. They must get the permission from court. Alteration record the prior approval of a court of law. Would like to alter the share capital, they must get the permission from court. So after getting approval from the court, the capital structure will change. Whether increase or decrease, they have to change. Alteration required the prior approval of a court of law. Internal reconstruction or capital reduction. Internal reconstruction or capital reduction. Internal reconstruction means reorganization of the capital structures of a company. Internal reconstruction means reorganization of capital structure of a company. Internal reconstruction means reorganization of capital structure of a company. It may result in the reduction of claim of shareholder and creditors. So, suppose if any company going to seek this company capital structure, they are going to modify it. After getting approval from the court, the capital structure will change. So they will, the shareholder and creditors will sacrifice some amount. Such a sacrifice can adjust capital reduction. Internal reconstruction is necessary for the companies which are facing financial difficulty or huge accumulated loss. So some of the company going to face heavy loss. So that such a loss can rectify some sacrifices given. So it is internal reconstruction. Alteration of share capital, power to alter the capital. What are the powers? A limited company having a share capital may, if so authorized by its article, alter its share capital as follows by passing an ordinary resolution. The first one, increase its authorized share capital by issuing new shares. So increase the capital, already they got the approval from the registered capital or authorized capital, they are going to issue share capital. This is alteration of share capital. Consolidate and divided all or any of its shares capital into shares of larger amount. Then it is existing shares. If voting percentage, age of shareholder change, tribunal approval on application is required. Then C. Convert all or any of its fully paid up shares into stock and reconvert that stock into fully paid up shares of any denominations. Alteration of share capital. Subdivided its existing shares or any of them shares of similar amount than it is fixed by the memorandum of association. Cancel shares any which at the date of passing of resolution have not been taken or agreed to be taken by any person. Note 1. The cancellation of shares shall not be deemed to be reduction of share capital. Note number 2. Notice of alteration to be given to the registrar within 30 days from doing so. Reduction of capital with the consent of Tribunal Section 66. A company limited by shares limited by guarantee having share capital may by a special resolution reduce the capital, alter its memorandum subject to confirmations by the tribunal in ways. It may extinguish or reduce the liability on any of its shares respect of share capital are not paid up. It may either with or without extinguishing or reducing liability on any of its shares, cancel any paid up share capital which is lost or is unrepresented by available assets. Example, rupees 10 shares converted rupees 2 fully paid up due to heavy losses. Pay off any paid up share capital which is in excess of the wants of the company. The tribunal shall give notice of every application made to the central government registrar and to the Securities and Exchange Board in the case of listed company and the creditors of the company, and shall take into consideration the representations, if any, made to it by the government registrar, the Securities Stock Exchange Board of and creditors within the period of 3 months from the date of receipt of the notice. Provide that where no representation has been received from the central government, registrar, the Security and Exchange Board, the creditors within the said period, it shall be presumed that they have no objection to the reduction. The tribunal may, if it is satisfied that the debt or claim of every creditor of the company has been discharged or determined or has been secured or his consent is obtained, make an order confirming the reduction of share capital on such terms and conditions as it is deemed to fit. No applications for reduction of share capital shall be sanctioned by the tribunal unless the accounting treatment proposed by the company for such reduction is in conformity with the accounting standard and a certificate to that effect by the company auditor has been filed with the tribunal. The order of confirmations of the reduction of shares capital by the tribunal shall be published by the company in such a manner as the tribunal may be direct. The company shall deliver a certified copy of the order of tribunal and of a minute approved by the tribunal showing: first one, the amount of share capital; second one, the number of shares into which is to be divided; third one, the amount of each shares; fourth one, the amount, if any, at the date of registration deemed to be paid up on such shares to the registrar within 30 days of the receipt of the company of the order, who shall register the same and issues a certificate to the effect. A member of the company, past or present, shall not be liable to any call or contribution in respect of any shares held by him exceeding the amount of difference, if any, between the amount paid on the shares or reduced the amount, if any, which is deemed to have been paid thereon, as the case may be, and the amount of the shares are fixed by the order of reduction. If any officers of the company, knowing, cancel the name of any creditor entitled to object to the reduction, knowingly misrepresent the nature or amount of the debt or claim of any creditors, the privacy to any such cancelment or misrepresentations as aforesaid, he shall be liable under section 447. If a company fail to comply with the provisions mentioned, it shall be punishable with fine which shall not be less than 5 lakhs rupees, but which may be extended to the 25 lakhs rupees. Procedure for reduction of share capital in brief. According to an Indian Company Act 2014 edition book briefly, PESL resolution, pass a PESL resolution should be allowed in Articles of Association. If Articles of Association does not allow, then alter the Articles of Association by passing the PESL resolution. Application to the court. Application PESL resolution or application to the court. Interest of creditors, interest of shareholder. Registration of order of tribunal with the registrar within 30 days of the receipts of the company in the order. Certified order by court is submitted. Approval minute by the court to be attached showing amount of share capital, number of shares into which is to be divided, amount of each shares, the amount, if any, at the date of registration deemed to be paid up on each shares. When registration take effects, certificate of registration by registrar. The reduction of capital without the sanction of the court, if it can take place by forfeiture of shares, leads to reduction if not reissued. The next one, surrender of shares. Third one, cancellation of shares. Fourth one, purchase of shares by the company. Fifth one, redemption of redeemable preferences. Sixth one, buyback of shares, means a company can purchase its own shares or other specified security by issuing its pre-reserves, security premium account, proceeds of a earlier issues other than the fresh issue or buyback. Alteration of share capital and internal reconstruction. Alteration of share capital which does not require court approval. Alteration of share capital which does not require court approval. Increase the share capital by fresh issue. Consolidation of shares by higher denominations. Subdivision of shares by lower denominations. Conversion of shares into stock by vice versa. Cancellation unused share capital. While alter the share capital does not require court approval. No need to get court approval. We can adjust based on articles of association. We can alter the share capital. So do not increase or decrease share capital. Alter the share capital. Capital structure is same, but so different amount is changed. This is called known as increase the paid up capital. Increase the share capital. Alteration of share capital and internal reconstruction. Alteration of share capital and internal reconstruction. The first journal entry. Increase the share capital. Increasing share capital by new issue of shares. Increasing share capital by new issue of shares. Regarding capital structure change, the share value is increased. Journal entry. Bank account data to share capital account. Bank account data to equity share capital account. For example, shares value increased by rupees 2 per shares. How many shares offers? For example, 5,000 shares equity shares. So for shares value increased rupees 2. 5,000 into 2, 10,000 rupees debited to bank account, 10,000 rupees credited to equity share capital account. So the company facing heavy loss, they are going to change the respective capital structures. So with maximum of authorized share capital. The next, consolidation of shares. Converting lower denominations of shares into higher denomination of shares. Equity share capital account data to equity share capital account. For example, the old existing share capital value 10 each. Existing share capital value 10 each. But new share capital value 100 each rupees per shares. For example, Pans company shares 1000 shares offered to the public at the rate of rupees 100 each. So existing shares value, but converted to, suppose shares value 100 rupees high, but shares value decrease rupees 10 means what? So the same this amount is not changed, but share capital value is not changed. But 1 lakh means 1 lakh, but amount is not changed, but face value of change, face value or share value increase. That is means increase value. This is means consolidation of shares. Whether shares value or share increase, it is means consolidation of shares. Equity share capital account data to equity share capital account 100. So being 10 rupees shares consolidated into 100 rupees shares. 10 rupees shares converted into 100 rupees shares. Then subdivision of shares. It is just opposite to consolidation. Higher denominations of shares divided into lower denomination of shares. Equity shares capital account data. Higher denomination of shares divided into lower denomination of shares. So amount is not changed, but shares value is changed. Share value or share is changed. For example, equity share capital, old share capital 100 rupees per shares, but new share capital 100 rupees, so 10 rupees, but shares were increased because, for example, 1000 shares at the rate of rupees 100 is 1000 shares at the rate of 100 rupees means 1 lakh, but here rupees converted into consolidated into 10 each, but shares 10,000 shares, so shares has increased, but their amount face value of shares increased. Journal entry equity share capital account data to equity share capital being 100 rupees shares subdivided into 10 rupees shares. Conversion of shares into stock or stock into shares. The fully paid shares may be converted into stock. Likewise, the stock also converted into shares. Equity share capital account data to equity capital stock account being equity share capital converted into stock. Equity share capital converted into stock means to equity share capital stock account. Equity capital stock account data to equity share capital account being stock converted into share. Stock converted into stock. Equity share capital account data to equity capital account, capital stock account. Suppose equity stock converted into share capital means equity capital stock account data to equity share capital account. So this is cancellation of unused share capital. These shares capital not yet issued, therefore no entry is required. So this is the procedure alteration of share capital. What are the procedure make? First, increase the share capital. Increase the share capital means suppose, for example, already issued 2000 shares at the rate of rupees 100 each. Again, they have got the approval from the, so no need to get the approval, but already registered capital is there. So maximum registered capital we can issue. So 2 rupees increased per shares value. So 1000 shares or 2 rupees increase, it is get it. So share capital. So bank account data to share capital account. Next, consolidation of shares. So converted into shares or shares values converted or share converted. For example, 10 rupees shares already, these shares converted into 100 rupees. So equity share capital account data rupees 10 value to equity share capital account, it is 100 rupees value. The next, D Company Limited with a share capital of rupees 10,000 equity shares rupees 100 each fully paid. Carry out by proper resolution a subdivision into shares of rupees 10 each. So the necessary journal entry to give effect the above transaction. For example, D Company Limited with share capital of rupees 10,000 equity shares of rupees 100 each. These shares converted into rupees 10 each. That is means, so equity share capital account data in the books of journal entry D Company Limited. Journal entry in the books of D Company Limited. Journal entry in the books of D Company Limited. What is journal entry? So how many shares issued? 10,000 equity shares of rupees 100 each. These shares converted into subdivision into 10 rupees each. So journal entry equity share capital account data to equity share capital account. How many shares? For example, 10,000 shares into 100 each, 10 lakh. 10,000 shares into 100 each, 10 lakh. So the same amount 10 lakh credited to equity share capital account. But do not change any amount value, but change face value of shares. So face value of shares has changed and also number of shares were increased. 10 lakh divided 10. 10 lakh divided 10. So 1 lakh shares. So being 10,000 equity shares of rupees 100 each fully paid, each subdivided into 1 lakh equity shares of rupees 10 each. So how is determined 1 lakh shares? So 10 lakh divided rupees 10 per shares, so is equal to 1 lakh equity shares divided into 10,000 equity shares of rupees 100 each fully paid. These shares divided into subdivision into shares rupees 10 each. So how many shares? 10 lakh divided 10, so it's equal to 1 lakh equity shares at the rate of rupees 10 each. So old equity share capital account data to new equity share capital. New equity share capital value 100 rupees is 10 rupees each. But the old equity share capital value, face value of shares rupees 10 each. So 100 each. Problem number 2. On 30th June 2011, Fortune Limited passed a resolution consolidating 80,000 fully paid equity shares of rupees 10 each into 8,000 fully paid shares of rupees 100 each. On 30th June 2012, the company passed another resolution converting the shares into stock. So, the journal entry. Listen, dear students, please listen. On 30th June 2011, Fortune Limited passed a resolution consolidating 80,000 fully paid equity shares of rupees 10 each. So, in the books of Fortune Company Limited journal entry, date, particulars, debit in inner column, so debit rupees, credit in rupees, amount. So, for the first year, journal entry 30th June 2011, 30th June 2011 A. So, equity share capital account data. Equity share means old equity share capital account. Old, how many shares? 80,000 fully paid shares at the rate of rupees 10 each. 80,000 fully paid shares at the rate of rupees 10 each. The shares going to alter 8,000 fully paid shares of rupees 100 each. So, old equity share capital account data. So, 80,000 into 10, 8 lakh rupees. To new equity share capital account, rupees 100 each. How many shares? 8,000 shares. 8 lakh divided 100 is equal to 8,000 shares. Amount do not change, that is means alteration of share capital. Capital structure only change, but capital is not changed. So capital rupees 10 lakh only. Whether old share capital 10 lakh, new share capital 10 lakh, but face value of shares has increased or decreased. Face value of shares decreased, but number of shares, face value of shares increased, number of shares decreased. Being 80,000 equity shares of rupees 10 each, consolidated into 8,000 equity shares of rupees 100 each. The next, these shares converted into stock. These shares converted into stock. So, journal entry, equity share capital account data, equity share capital account data to equity capital stock account, to equity capital stock account. How much they are converted to stock? Shares converted to stock 8 lakh rupees, being 8,000 equity shares of rupees 100 each, converted into equity capital stock account. Equity capital stock account. Problem number 3. RG Limited has an issued capital of rupees 4 lakh in 4,000 shares of rupees 100 each. 4,000 into 100 is equal to 4 lakh, on which 70 per shares has been called up. 70 per shares has been called up. The company now decide to reduce the share capital to shares of rupees 70 each fully paid by cancelling the uncalled amount rupees 30 per shares. So already we have discussed earlier, uncalled amount do not consider. Uncalled amount and uncalled amount fully paid by cancelling uncalled amount do not affect in accounts. So it is fully cancelled. Uncalled amount, suppose if called up amount, so proper message given to the respective shareholder, these uncalled unpaid share call money, that is called known as call in arrears. So these call in arrears going to forfeited, but uncalled amount, so cancellation the uncalled amount 30 rupees, so you have to avoid, do not affect in accounts. Journal entry, equity share capital account data rupees 100 each. Equity share capital account data rupees 100 each. So to equity share capital rupees 70 each. Equity share capital 70 each, being 4,000 equity shares of rupees 100 each, 70 paid up converted into fully paid up shares 70 each. This amount is fully paid, converted into fully paid shares. So 4,000 into 100 like 4 lakh rupees, but 30,000 shares uncalled share, uncalled amount rupees, face value of shares is uncalled rupees 30. So this is going to cancelling. So journal entry, equity share capital account data 100 each to equity share capital account 70 each. So 4 lakh minus, sorry, 4 lakh into 70, 2 lakh 80,000 credited to capital account. 2 lakh 80,000 divided 100. So 2 lakh 80,000 divided 100. How many shares? So like as 28,000, sorry, 2,800 shares. This is means 70 paid up. A company has paid up share capital 12 lakh 80,000 divided into 1 lakh 60,000 equity shares of rupees 10 each, 8 per share paid up. The company decided to reduce the paid up capital to 6 per share paid up by paying necessary amount. Listen, the students, so please first you have to identify the company has paid up share capital 12 lakh 80,000 divided into 1 lakh 60,000 divided into 1 lakh 60,000 equity shares of rupees 10 each, 8 per shares paid up. The company decided to reduce the paid up capital 6 per shares paid up by the paying officer necessary account in the books of journal entry of A company limited. One first particular debit in inner column, sorry, debit in rupees, credit in rupees. First journal entry, equity share capital account data, equity share capital account data 12 lakh 80,000, but this means 1 lakh 60,000 shares at the rate of rupees 10 each, 1 lakh 60,000 at the rate of 10 each, 1 lakh 60,000 at the rate of 10 each, but this has 8 shares rupees paid up, 8 rupees paid up. To equity share capital account 6 rupees, equity share capital account 6 rupees. To equity share holder account rupees 2, it is called known as capital reduction. So paid up shares value 8 rupees each, but 6 rupees only they are called paid up capital. The remaining 2 is called known as like losing the capital value. Journal entry being 1,60,000 equity shares of rupees 10 each, 8 paid up converted into fully paid up shares 6 each, and remaining money is returned to its shareholder. Remaining money is returned to shareholder. The next equity shareholder account data to bank account. Equity shareholder account data to bank account. Equity shareholder amount 3,20,000. 3,20,000 debited to shareholder account, credited to their bank account. Problem number 5. Paradise Limited has 50,000 equity shares of rupees 100 each. Rupees 80 per shares called up. The company decided to pay rupees 30 per shares of paid up capital and reduce the 100 shares to 50 shares fully paid by cancelling the unpaid amount. So the necessary journal entry. First, how many shares? Total 50,000 shares. How many shares? Total 50,000 shares. 50,000 into 100, 50 lakhs. But 50,000 equity shares at the rate of rupees 80 per shares. 50,000 at the rate of 80. For 40 lakh debited to equity share capital account. To equity share capital 50 into 50,000. 50 into 50, 25 lakhs. The next equity share holder account 30 into 50, 15 lakh. So being 50,000 equity shares of rupees 100 each, 80 paid up converted into fully paid. The remaining 50 is each remaining money is returned to the shareholder. Total 80. So 50 is called paid up. The remaining 30 is unpaid. So returned to the shareholder account. So return shareholder 50 into 30, 15 lakhs. Then 50 into 50, 25 lakhs share capital account. The next equity shareholder amount paid to equity shareholder account. So equity shareholder account data to bank account. In order to provide funds for capital reduction scheme, a debenture holder of rupees 4 lakh has agreed to take over stock worth 1 lakh and book dates 80,000 in full satisfaction of the amount due to him. Pass the necessary journal entry. So what is the debenture account? Next, in order to provide funds for capital reduction scheme, a debenture holder of 4 lakh has agreed to take over stock rupees 1 lakh. So the unbooked debt 80,000 in full satisfaction of the amount due to him. Journal entry in the books of journal entry. So date, particulars, debit in rupees, credit in rupees. Debenture account data to debenture holder account. Debenture account data to debenture holder account. So much 4 lakh rupees being debenture issued at par. The next this amount converted. So first they are going to settle the respective amount. Debenture holder account data 4 lakh. How is possible to settle the debenture holder? By way of stock 1 lakh, by way of debtors 80,000. The remaining 2,20,000 is capital reduction account. The debenture holders, they are going to sick company. The debenture holder sacrifice some amount due to sick of the company. In order to provide funds for capital reduction scheme, debenture holder 4 lakh has agreed to take over stock worth 1 lakh. So okay, I am ready to take stock worth 1 lakh, and book debts also I am ready to take over, and the remaining amount also full satisfaction means total. Do you want to fulfill the debenture holder? We need 4 lakh rupees, but we have from the books book date 1 lakh and stock value 1 lakh, book date 80,000, but the remaining 2,20,000 capital reduction. So being debenture holder accepted to take stock and debtors and leave the balance for capital reduction, they are going to sacrifice some amount 2,20,000 as a contribution towards capital reduction scheme. The 5% debenture holder who were to receive 13,80,000 from the company have agreed to reduce their claim to 50%, which is to be satisfied half by issues of 7% mortgage of debentures and half the issues 8% preferences of rupees 100 each. Pass the necessary journal entry in the books of the company. In the books of journal entry, this company. First one, as a contribution towards capital reduction scheme, 5% debenture holder. So 5% debenture account data to 5% debenture holder account. 5% debenture account data to 5% debenture holder account. Being debenture had to be redeemed 13,80,000. They are going to redeem the respective debentures at par value. The next debenture holder account 13,80,000. Debenture holder account, how much you want to fulfill the debenture holder account? 13,80,000 to 7% mortgage debenture converted into. First, have agreed to reduce their claim to 50%, which is to be satisfied of by issue of 7% mortgage. So 50% how much? 13,80,000. 13,80,000. First, the 7% mortgage of debenture. 50% is 7%. 50% first you have to take. Then you have to consider 7% mortgage debt debenture off by issue of 8% preferences. So 3,45,000 mortgage of debenture, 8% preference share capital also 50%. Total 13,80,000 divided into 2. 13,80,000 divided 2 means 6,90,000. 6,90,000. The 6,90,000, 50% for 7% mortgage of debenture, then 8% preference share capital accounts. There are two type of debenture and mortgage debenture preference share capital to settle. The remaining capital reduction account. Total, do you want to fulfill the debenture holder account? We need 13,80,000. So 50% adjust to 7% mortgage of debenture. The remaining 50%, 8% preference share capital. Total 13,80,000 divided into 2 is equal to 6,90,000. 6,90,000 divided into 2. So one is 3,45,000 for mortgage debenture, then 3,45,000 for preference share capital. The remaining 50%, it is capital reduction. 2 capital reduction account 6,90,000. Suguna Company Limited has been suffering heavy loss in the past, so it has decided to go for reconstruction scheme by reducing 22,000 equity shares of rupees 100 each into 50 each, so as to write off accumulated losses 10,70,000. Give the necessary journal entry to record the above transaction. In the books of journal entry, listen. In the books of Suguna Company Limited journal entry, date, particulars, debit in rupees, credit in rupees. First, Suguna Company Limited has been suffering heavy losses in the past. So, preceding relevant previous year, past relevant previous year, they are going to face heavy loss. In this regard, they are going to decide to go for reconstruction scheme by reducing 22,000 equity shares of rupees 100 each into 50 each. So, face value of shares rupees 10 each, 100 each. Face value of shares rupees 100 each, but they got the approval from court, they are reduced to 50 each. So, old share capital account data, old share capital account data to new share capital to capital reduction account. So, total 22 lakhs, 22,000 into 100, 22 lakhs debited into old equity share capital account. Old equity share capital, how much? 22,000 into 100, 22 lakhs. But this amount converted into are reduced by 50 each, reduced by 50 each. So to new equity share capital account, to new equity share capital account, to capital reduction account being equity shares capital of rupees 100 each converted into 50 each fully paid up, the remaining to be utilized to capital reduction scheme. Remaining amount utilized capital reduction scheme. The capital reduction can adjust against accumulated losses. Do you want to fulfill the capital reduction? We need how much? We want capital reduction. How much we want? So 50% only. 50% how much? 10 lakh, 70,000. 11 lakh only. We need 11 lakh. Listen, dear students. So Suguna Company Limited has been suffering heavy losses in the past. So it has decided to go for reconstruction scheme by reducing 22,000 equity shares of rupees 100 each into 50 each. So the face value of shares is fully paid shares rupees 100. But they got the approval from the court. They are going to reduce up to 50 rupees each. 50 rupees each. So old equity share capital account data. So 50,000 into 22,000 into 100, 22 lakhs. To new equity share capital account, 22,000 into 50, 11 lakh. 22,000 into 50, 11 lakh. The remaining balancing figure is called capital reduction. Capital reduction. So 22,000 into 50, 11 lakhs is capital reduction. So how much you have profit? Do you want fulfill the capital reductions? First, how much capital profit loss account and general is there? First, you have to identify. So capital reduction account data 11 lakh. So how much you need to fulfill the capital reduction? 11 lakh. But you have only profit loss account 10 lakh 70,000. The remaining 30,000 it is transferred to capital reserve account. It is transferred to capital reserve account. Journal entry. So capital reduction account data to accumulated losses account to capital reduction account. Accumulated losses account to capital reserve account. So on behalf of reduction of capital, we got profit 11 lakh rupees. We have sufficient amount. The company is heavy loss, so they can't run the company loss. So in this regard, they got the approval from the court. The company shareholders sacrifice some amount 50%, 50 rupees per shares. They got 11 lakh capital reduction. Such amount utilized for the facing heavy losses. First, you can adjust profit loss account. Capital reduction account data to profit loss account 10 lakh 70,000. The remaining 30,000 you have sufficient amount. Such amount transferred to capital reserve account 30,000. Being capital reduction utilized for writing off of fictitious assets and balance transferred to capital redemption reserve account. Being capital reduction utilized for capital reduction for utilized writing off of accumulated losses, balance if any transfer to capital reserve account. Problem number 9. In order to eliminate the accumulated losses of rupees 45,000 from the balance sheets. In order to eliminate the accumulated losses of 45,000 from the balance sheets, a company has decided to convert its 15,000 7% preference shares of rupees 10 each into 6% preference shares of rupees 10 each. 6 are paid up, so the necessary journal entry in the books of the company. Listen, in order to eliminate the accumulated losses 45,000 from the balance sheets. How much they got loss during the previous year? 45,000 rupees. That is means accumulated losses 45,000. Has company decided into converted into 15,000 7% preference shares of rupees 10 each, 6% preference shares of rupees 10 each, 6 rupees per shares paid up. So already 15,000 7% preference shares. Rate of dividend how much? 7%. Per face value of shares rupees 10 each. These shares converted into 6% preference shares at the rate of rupees 6 each. 6 rupees. So journal entry. Old equity share capital, old preference share capital account data. Old preference share capital how much? 7% preference shares. 15,000 shares of rupees 10 each. 7% preference shares capital account data. 15,000 into 10, 1,50,000. 2. 8%, 6% preference shares capital account. First that is means old preference shares capital, 7% preference shares capital account data. 2. 6% preference shares capital account. 2 capital reduction account. 6% capital reduction, capital preference as capital value 6 rupees, but face value of says 10, but 6 rupees paid up value. 6 into 15,000, 45, 6 into 15,000, 90,000. 6 into 15,000, 90,000. So total old share capital value 1,50,000, but new share capital value 90,000. The remaining is rupees 4 rupees called known as capital reduction. So 15,000 into 4, 60,000. This is called capital reduction. 7% preference as capital account data to 6% preference as capital account to capital reduction account. How many shares? 15,000 shares at the rate of rupees 10 each. Old 7% preference as capital account. To new preference as capital 6%, but shares value rupees 6 each. 15,000 into 6, 90,000. The remaining amount capital reduction rupees 60,000. The next capital reduction, how much you have? 60,000 rupees only, but accumulated loss in the balance is 45,000. Capital reduction account data rupees 60,000 to accumulated loss account or profit loss account loss bracket, then 45,000. The remaining 15,000 transferred to capital reserve account. Capital reserve account being capital reduction account, it is utilized to write off the accumulated losses and the balance transferred to capital reserve account. Being the capital reduction account is utilized to write off the accumulated losses and the balance transferred to capital reserve account. Problem number 10. After getting approval of the court, XY Company Limited has decided to issue to its equity shareholders the following exchange for 60,000 shares of rupees 10 each in order to write off intangible assets of 1 lakh, fictitious assets 1,60,000, fully paid equity shares up to the extent of 2/6 of the present holding, 6% preference shares to the effect of 1/4 of the above new equity shares. So the necessary journal entry in the books of XY Company Limited. In the books of XY Company Limited journal entry for the month of so and so dot, nothing is there. Date column, particular column, debit in rupees, credit in rupees. First, after getting approval from the court, XY Company Limited has decided to issue to equity shareholder the following exchange of 60,000 shares of rupees 10 each in order to writing of intangible assets 1 lakh, fictitious assets 1,60,000. The fully paid equity shares up to the extent of 2/6 of the present holding. 2/6 of the present holding. Equity share capital account data. Fully it is equity share capital account data to capital reduction account. Being equity share capital reduced. Equity share capital reduced. How much reduced? 2 lakh rupees. 2/6 of the present holding. 2/6 of the present holding. Then preference share capital account data. Preference shares capital account data to capital reduction account 1,50,000. 6% preference shares to effect 1/4 of the above new equity shares. 1/5 of the above new equity shares. 1/5 how much new equity shares? 2/6 of the present holding. 2/6 of the present holding. 2/6. So 2/6 how much? 20,000 shares. 20,000 into 100, 2 lakh capital reduction. Preference share capital account data to capital reduction account. The balance is of Sunlight Company Limited on 30th June 1998 was as follows. The balance sheets of Sunlight Company Limited as on 30th June 1998 was as follows. Patent at cost 4,25,000. Leasehold premises 65,400. Plant and machinery 21,100. Stock in hand 27,500. Sundry debtors 38,250. Cash in hand 250. Discount on issue of shares 9,000. Preliminary expenses 6,000. Advertisement suspense 57,500. So what are the last here? What are the accumulated assets? What are the fictitious assets here? One is discount on issue of shares, preliminary expenses, patent at cost. These are all items is accumulated loss. Then issued, subscribed, called up, paid up capital. Preference shares at the rate of rupees 100 is 3,75,000. Ordinary shares at the rate of rupees 100 is 2,50,000. Sundry creditors 15,000. Bank overdraft 10,000. Total 6,50,000 assets, 6,50,000 liability. This is the financial position of the business. Sunlight Company as on the date of 30th June 1998. The following scheme of reconstruction was resolved and adopted. The preference shares be reduced to an equal number of shares of rupees 50 each. Existing equity shares value rupees 100 each, but they got the approval of the court. They are reduced to rupees 50 each. So in the books of Sunlight Company Limited journal entry for the month of June 30th, 1998. So first journal entry, the following preference shares reduced. Following preference shares reduced to an equal number of shares rupees 50 each. Preference shares value 100 each, but it reduced to rupees 50. Journal entry, old preference shares capital account data to new preference share capital account to capital reduction account. 3,75,000 divided to 3,75,000 divided to 1,87,000 being old preference share capital account data 3,75,000 to new equity preference share capital account 3,750 into 50 to capital reduction 1,87,500 being preference shares of rupees 100 each reduced to rupees 50 each, reduced to rupees 50 each. The next, that the ordinary shares be reduced to an equal number of shares rupees 25 each. Already ordinary shares value rupees 100 each. Ordinary shares values rupees 100 each. 2,50,000 divided 100. So 2,50,000 divided 100 how much? 2,500 shares. 2,500 shares. 2,50,000 divided 100 to 2,50,000 divided 100. So 2,500 shares. 2,500 shares. 2,500 shares at the rate of rupees 100 is, that is means old equity share capital. 2,50,000 debited to old equity share capital to new equity share capital. That the ordinary shares be reduced to an equal number of rupees 25 shares. Reduced to, it is up to. So suppose capital reduction value, so 75 rupees per share. Capital reduction value 75. That the ordinary shares be reduced to the equal number of shares 25 each. Journal entry, equity share capital account data, equity share capital account data, that is means old equity share capital account data to new equity share capital to capital reduction account. So for shares value rupees 100 is, that is means existing shares value, but for capital reduction the new shares value rupees reduced to rupees 25, reduced to rupees 25. So 2,500 into 25, 62,500. The remaining amount is capital reduction. So 2,500 into 75, 1,87,500. So being ordinary shares of rupees 100 each reduced to rupees 25. Reduced to 25 means, so 75 rupees reduced. 75 rupees per shares reduced. The next, scheme of reduction to adjust to preliminary expenses, advertisement suspense account and discount on issue of shares to writing up entirely 15,400, leasehold premises 7,500, stock 20%, plant and machinery, sundry debtors and balance available used to write up patent, pass the necessary journal entry. First, so how much total capital reduction value? Capital reduction value, so preference shares value, old preference shares value, preference shares 1,87,500. Then equity shares 1,87,500. Total 3,75,000 capital reduction. Capital reduction how much? Total 3,75,000. How is determined? So on behalf of reduction of new preference share capital, we got capital reduction 1,75,000, 1,87,500. On behalf of ordinary share reductions, we got capital reduction 1,87,500. Total 3,75,000. So capital reduction account data. So one by one, which one? First, the message given. First, you have to take preliminary expenses. Capital reduction account data to preliminary expenses. How much preliminary expenses? 6,000 rupees. To preliminary expenses 6,000. Next, the next item is advertisement suspension account. To advertisement suspense account rupees 57,500. Total we have 3,75,000. So first we can adjust 6,000. The next one 57,500. Then third one discount on issue of shares. Discount on issue of shares 9,000. So the next then 15,400 for leasehold premises, 7,500 for stock, 20% of plant and machinery. Plant and machinery value 21,100. You have to take 20%. The next sundry debtors, balance available to be transferred to patent account, adjust to patent. So patent value how much? Balance 1 by 1. First you have 3,75,000. First you can adjust preliminary expenses. Second, advertisement expenses. Third, discount on issue of shares. Fourth, leasehold premises. Fifth, stock. Sixth, plant and machinery at the rate of 20%, 21,100. Then sundry debtors, the 20%. Balance should adjust against patent, being accumulated losses and sundry assets writing up, being accumulated losses and sundry assets writing up. The Surrey and Company promoted Unlucky Limited in 2010. The working of the company was not too successful on 31st December 2012. The balance is Unlucky stood as follows: land and building 1 lakh, machinery 2,60,000, furniture 20,000, stock 3,70,000, debtors 1,80,000, goodwill 2 lakh, profit loss account 9,70,000, total 21 lakh. Authorized share capital 20,000 shares of rupees 100 each, 20 lakh. That is means authorized capital do not affect in accounts. Subscribed capital 19,000 shares of rupees 100 each, fully paid 19 lakh. Creditors 1 lakh. Surrey and Company Limited 1 lakh. The company to be reconstructed on the basis of the following scheme. They are going to reconstruct the capital the following scheme. 19,000 shares of rupees 100 each had to be reduced to an equal number of fully paid shares of rupees 40 each. The face value of shares 100 rupees is, but at the time of reduction of share capital reduced to 2 rupees 40 each. So fully paid shares of rupees 40 each. So how much reduction they got? 60 rupees per shares. 60 rupees per shares. The debt of rupees 1 lakh due to Surrey Company Limited was also to be reduced. The remaining 1,000 unused shares being used to them fully paid shares of rupees 40 each, fully settlement of the amount due to them. The amount thus rendered available by the reduction of capital by the above arrangement with Surrey Company Limited is to utilize whipping up of goodwill. First you have to adjust goodwill. The next, profit and loss account, balance, write down the value of machinery, give the necessary journal implementation of reconstruction scheme, and also prepare the balance sheets immediately for after reconstruction. First journal entry in the books of Surrey and Company Limited, journal entry for the month of December 31st December 2012. Date, particulars, rupees, debit in rupees, credit in rupees. First, 19,000 shares at the rate of rupees 100 each. Old share capital account data, old equity share capital account data to new equity share capital to capital reduction account. So old share capital account 19,000 into 100 or 19 lakh rupees. To new equity share capital 19,000 into 40, 7,60,000. To capital reduction 19,000 into 60, 11,40,000, being 19,000 100 rupees equity share capital reduced to 2 rupees 40 each, being shares of rupees 100 each reduced to 2 rupees 40 each. The next, Surrey and Company Limited rupees 1 lakh, so converted into new share capital. Surrey Company Limited account data to new share capital, 1,000 shares at the rate of rupees 40 each. So 1,000 rupees at the rate of rupees 40 each. So how much? Listen. So the debt of next, the remaining unused 1,000 shares we reduced to 2 rupees, we issued 2 rupees 40 each, fully settlement the amount. So journal entry, Surrey and Company Limited account data to new share capital account to capital reduction account, 1,000 into 40, 40,000. The remaining on behalf of reduction, see we got 60,000 rupees profit. The next capital reduction account at 12 lakhs to good. So how much you got capital reduction? One is 11 lakh 40,000, another one is 60,000, total 12 lakh we got. First we can adjust goodwill. They mentioned there the amount that's rendered available by the reduction of capital and by the above arrangement with Surai and Company Limited, we utilize whipping up of goodwill. First you have to write out goodwill. Goodwill value how much 2 lakhs. Then total we have capital reduction 12 lakh. First you should adjust 2 lakhs goodwill. The remaining figure how much? 12 lakh minus 2 lakh, remaining figure 10 lakh. Then again they mentions, so which one? Profit and loss account. So profit and loss account 9 lakhs 30,000, 70,000. The remaining you have only 30,000. Such a 30,000 you have to adjust to plant and machinery. Plant and machinery being accumulated losses and sundry assets writing up in the books of balance sheet. So first you have to find out notes to account. First you have to find out notes to account. So first notes is which one? Balance sheet. Do you want to prepare balance sheet? First note number 1, share capital. What type of share capital you have? So authorized capital do not affect in accounts. First subscribed and paid up capital 19,000 shares at the rate of rupees 19,000 plus 1,000 shares at the rate of rupees 40 each, because 60 already capital reductions. Capital reduction for shares value 20,000 shares. So existing issued and subscribed capital 19,000 plus 1,000, total 20,000 shares at the rate of rupees 40 each. 20,000 into 40, 8 lakh rupees. So note number 1, 8 lakh. Second, note number 2, reserve and surplus. Reserve and surplus is not there. The next, other current liabilities. Other current liabilities is to go to liability side. Other current liabilities. Other current liabilities. That is means non-current liabilities. Non-current liabilities, long-term borrowing, nothing is there. The next, trade payable. Trade payable only he has given sundry creditors. Sundry creditors 1 lakh is given. Then bills payable nothing is there. Outstanding expense nothing. Tangible assets. Here tangible assets. What are the items tangible assets? Land and building 1 lakh. Machinery 2 lakh 60,000 minus depreciation 30,000. How is determined 30,000? That is means they give the journal entries, the implement reconstruction schemes, also prepare the profit and loss account in writing down the value of machinery. So value adjust the balance sheets. Total 12 lakhs capital reduction. First we can adjust goodwill 2 lakhs. The remaining amount 9 lakhs 70,000 adjust. Then balance amount 30,000 whipping up of depreciation like 30,000. So the next furniture rupees 20,000. These are item is tangible assets. These are item is tangible asset. Next furniture value 20,000. Next inventory. That is means note number 4 inventory. Stock only is given 3,70,000. Next note number 5 trade receivable. Sundry debtors is given 1,80,000. Sundry debtors 1,80,000. Next goodwill intangible assets already we can adjust. That is means capital reduction. Capital reduction how much given? On behalf of capital reduction we have adjusted. The next inventory 4. Then unlucky limited balance sheets of as on the date of 31st December 2012. Particulars note number nil. Equities and liability. First one shareholder funds. Shareholder funds share capital. Note number 1 8 lakh. Note number 1 8 lakh. Reserve and surplus nil. The next long-term borrowing non-current liabilities. Note number Roman letter 2 non-current liabilities. Non-current liabilities nils. Next third one current liabilities. Current liability trade payable. Note number 2 1 lakh rupees. Total liabilities equities and liabilities 9 lakh rupees. The next assets. Note number 1 Roman letter 1 non-current assets. Non-current assets fixed assets like tangible fixed assets tangible assets. Note number 3 3,50,000. Note number 3 3,50,000. Non-current assets. Non-current assets nothing is there. You put nil. Then current assets. Current assets inventories. Note number 4 3,70,000. Trade receivable. Note number 5 1,80,000. Total Roman letter 1 plus Roman letter 2 plus Roman letter 3 and assets 9 lakh rupees. Total liability 9 lakh. Total assets 9 lakh. Give the journal entries for the following transaction in connection with internal reconstruction. Give the journal entries for the following transaction in connection with internal reconstruction. First, 30,000 equity shares of rupees 10 each fully paid, reduced to shares of rupees 5 each fully paid. For the reconstruction of scheme, they got the approval from the court 30,000 equity shares at the rate of 10 each, but shares value reduced to rupees 5 each. So old equity share capital account data to new equity share capital to capital reduction. 30,000 into 10, 3 lakh debited to equity share capital account. Then 30,000 into 5, 1,50,000 credited to new equity share capital. Then 1,50,000 capital reduction account. 309% debenture of rupees 309% debenture of rupees 1,000 each converted into 1,500 12% debenture of rupees 100 each. Listen, 309% debenture of rupees 1,000 each converted into 1,500 12% debenture of rupees 100 each. So journal entry in the books of 9% debenture account data, 9% debenture account data, 300 into 1,000, 3 lakhs rupees. 2. 12% debenture account, 12% debenture account, 1,500 into 1,500 into 100, 1,50,000. The balance amount capital reduction. Listen, 300, 9% debenture of rupees 100,000 each. 300 into 1,000 debited to 3 lakh rupees. It is converted into 1,500 shares at the rate of rupees 100 each. Thousands value 300 shares, but here converted into 1,500 shares at the rate of rupees 100 each. 1,500 into 100, so 9% debenture account data to 12% debenture account to capital reduction account. The debit balance of profit loss account 1,50,000 and preliminary expenses 30,000 were written off. The value of plant and machinery and stock were written down by 60,000 and 30,000 respectively. So capital reduction total. So 30,000 equity shares of rupees 10 each fully paid reduced to shares of rupees 5 each. We got 1,50,000 capital reduction. Then debenture also reduced to 1,50,000 we got. So total 3 lakh we have capital reduction. Capital reduction account data to first adjust whipping up of loss, to profit loss account 1,50,000, to preliminary expenses 30,000, total 1,80,000. The remaining we have 1,20,000. Then plant and machinery value, stock value written of 60,000, 30,000. To plant and machinery 60,000, to stock account 30,000. Total 1,50,000 plus 30, 1,80,000, 2,40,000, 2,70,000. The remaining 30,000 transferred to capital reserve account. So journal entry, capital reduction account data 3 lakhs, to profit loss account 1,50,000, to preliminary expenses 30,000, to profit plant and machinery 60,000, to stock account 30,000, to capital reserve account 30,000, being accumulated losses and sundry assets written off and balance transferred to capital reserve account. Archani Limited has share capital of rupees 5 lakhs divided into 5,000 shares of rupees 100 each, fully paid. So the entries under each of the following conditions. Listen, Archani Limited has share capital of rupees 5 lakh divided into 5,000 shares of rupees 100 each. So share capital value 5 lakh. How many shares? 5,000 shares at the rate of rupees 100 each, fully paid. So the entries under each of the following conditions. First, when Archani Limited resolved to subdivide the shares into 50,000 shares at the rate of rupees 10 each, fully paid. How many shares converted? 50,000 shares already issued, 5,000 shares, but face value of shares 100 each converted into 10 each. When Archani Limited resolved to convert its 5,000 shares of rupees 100 each into 5 lakh worth of stock. Journal entry, equity share capital account data to equity share capital account, that is means converted shares. Equity shares capital 100 into 5,000, 5 lakh rupees. So new equity share capital 50,000 into 10, 5 lakh rupees, being 5,000 shares at the rate of rupees 100 each, subdivided into 5,000 equity shares, 50,000 equity shares of rupees 10 each. The next, the shares converted into stock. So equity share capital account data to equity capital stock account, equity stock account. Next, 5,000 shares of rupees each, 100 each converted into equity stock. Deja Limited 60,000 equity shares of rupees 100 each. Rupees 80 per shares called up. Now the company decided to pay off 20 per shares the paid at capital and the same time to reduce rupees 100 shares to 60 shares fully paid up. By the cancelling unpaid amount, give the necessary journal entry. Equity share capital account data to equity share capital account to shareholder account. So how much? 60,000 into 80, 48 lakhs. 60,000 into 60, 36 lakhs. 60,000 into 20, 12 lakhs. That is means transfer to shareholder account. This amount paid to shareholder account data to bank account. The share capital, problem number 16. The share capital of G Limited consists of the following. A. 10,000 6% preference shares of rupees 100 each. 10,000 6% preference shares of rupees 100 each. 50,000 equity shares of rupees 10 each. 50,000 equity shares of rupees 10 each. The shares were fully paid. Shares were fully paid. Both the type of shares, whether preference shares and equity shares, both the shares are fully paid. The company had accumulated losses totaling 3,50,000. Besides preliminary expenses 20,000. First you have to find out capital reductions. The company having loss totaling 3,50,000 accumulated losses and preliminary expenses 20,000. It was also ascertained that the fixed assets which should in these books 14 lakhs were overvalued to the extent of rupees 4 lakh. The following scheme was adopted to write off the losses and reduce the assets. First, 6% preference shares were to be converted into 7% preference shares of rupees 68. Already preference shares, how many shares? 10,000 preference shares at the rate of rupees 100 each. So rate of dividend 6%. But these shares converted to 7% preference shares. So but shares value reduced to 2 rupees 60 each. Reduced to 60 rupees. Journal entry. 6% preference shares capital account data. 6% preference shares capital account data to 7% preference shares capital account to capital reduction account. So 10,000 into 100, 10,000 into 100, 10 lakh rupees. 10,000 into 100, 10 lakh rupees debited to 6% preference shares capital account to 7% preference shares capital account. So per shares value rupees 60 each. How many shares? 10,000 shares. 10,000 preference shares at the rate of rupees 60 each. 10,000 into 60, 60 lakhs credited to 7% preference shares capital account. Then capital reduction. So how much capital reduction? 60,000 into 40 rupees 4 lakh rupees, being 6% preference shares converted to 7% preference shares. So shares value reduced to 2 rupees 60 each. Reduced to 2 rupees 60 each. Next. Then equity shares were reduced to 2 rupees 2 each. Equity shares were to be reduced to 2 rupees 60 each. Old equity share capital account data. Old equity share capital account data to new equity share capital to capital reduction account, because the shares value reduced to 2 rupees 2 each. So reduced by rupees 2. Reduced by rupees 2. Reduced to 2 rupees 2 means 8 rupees reduced there. Reduced to 8 rupees reduced by 8 rupees. So equity shares were to be reduced to 2 rupees 2 each. So this is known as, so 8 rupees reduced, 8 rupees reduced, but only the new share capital value 2 each. So old share capital account data 50,000 into 10. So 5 lakh debited to equity share capital account. 2. New equity share capital 50,000 into 2, 1 lakh rupees. To capital reduction, 50,000 into 8, 4 lakh rupees, being equity share capital reduced to 2 rupees 2 each. The next total capital reduction value on behalf of preference shares capital reduction 4 lakh. On behalf of equity share capital reduction we got 4 lakh. Total 8 lakh we have capital reduction. First you have to take capital reduction 8 lakhs. Ripping up first accumulated loss if any. How much accumulated loss? First 3,50,000. We have sufficient amount to fulfill the accumulated loss. Then you should adjust preliminary expenses 20,000. Total we have capital reduction 8 lakh rupees. First you should adjust 3,50,000 profit loss, accumulated profit loss account, and preliminary expenses 20,000. So capital reduction account data 8 lakh to accumulated loss account, that is means profit loss account 3,50,000 to preliminary expenses 20,000 to fixed assets. Fixed assets value how much? So 14 lakh rupees. These assets has overvalue to the extent of rupees 4 lakh. Overvalue means what? Loss. So loss on behalf of the assets values to ascertain, but 14 lakh value, so overvalue rupees 4 lakh. Book value, so less than sales value. Book value less than sales value. Sales value less than book value. This is means overvalue. This is means overvalue. Journal entry. So capital reduction account data 8 lakhs to profit loss account 3,50,000. Preliminary expenses 20,000. Fixed assets 4 lakh. The remaining 30,000 transferred to capital reserve account, being accumulated losses and sundry assets written off and balance transferred to capital account. Problem number 17. In order to eliminate the accumulated losses of rupees 45,000 from the balance sheet, a company has decided to convert in 15,000 7% preference shares of rupees 10 each into 6% preference shares of rupees 10 each, 6 plus paid up. So the necessary journal entry in the books of the company. In the books of journal entry. In the books of journal entry, nothing is named. In order to eliminate the accumulated loss of rupees 45,000 from the balance sheet, the company has decided to convert 15,000 7% preference shares of rupees 10 each into 6% preference shares of rupees 10 each, 6 per shares. So journal entry 7% preference shares capital account data, 7% preference shares capital account data, 15,000 into 10 1,50,000 to 6% preference shares capital account. So listen, 6% preference shares converted. 6% means 15,000 into 6, so 90,000. The remaining figure is capital reduction, being 7% preference shares of rupees 10 each converted into 6% preference shares of rupees 6 each. So 7% preference shares converted to 6% preference shares reduced to rupees 60 each. Reduced to rupees 60 each. Reduced by rupees 4. That is means capital reduction. This capital reduction adjusts only 45,000 accumulated losses. So we have how much? So 15,000 only, we have 60,000 profit loss account. Capital reduction account data 60,000 to profit loss account 45,000. The remaining figure transferred to capital reserve account rupees 15,000, being accumulated losses written off and balance transferred to capital reduction account, being capital reduction whipping up of accumulated losses and balance transferred to capital reserve account. Problem number 18. For example, a company with a capital of rupees 10 lakh. Company capital of rupees 10 lakh divided into 10,000 equity shares of rupees 100 each, on which 75 is paid out, decided to recognize its capital by splitting one equity shares of rupees 100 each into such a 10 shares of rupees 10 each. The consequential entry to pass in such a case would be in the books of journal entry. So like old equity share capital account data, amount is not changed. So listen, so 10,000 into 75, 7,50,000 rupees. The new equity share capital account, so 10 by 1 into 10,000, 10 by 1 into 10,000. So 10,000 into 75, 7.5 is equal to 7,50,000. Being 10,000 equity shares of rupees 100 each, 75 paid up is converted into 1 lakh equity shares of rupees 10 each, 750 paid up, 750 paid up. ABC Company Limited passed a resolution and got court permission for the reduction of its share capital by 5 lakh for the purpose mentioned as under. Already they got the capital reduction value 5 lakh. Capital reduction value 5 lakh. So the procedure to make the reduction of capital, to write off the debit balance of profit and loss account 2 lakh 10,000, to reduce the value of plant and machinery by rupees 90,000 and goodwill rupees 40,000. Reduce the value of investment by 80,000. Total how much? 2 lakh 10,000 plus 90,000, 3 lakh. 3 lakh plus 40,000, 3 lakh 40,000. 3 lakh 40,000 plus 80,000, 4 lakh 40,000. The remaining 60,000, what? So you have to do, first you have to find out. The reduction was made by converting 50,000 preference shares of rupees 20 each fully paid up to the same number of preference shares of rupees 15 each fully paid, and by converting 50,000 equity shares of rupees 20 each on which 15 paid up into 50,000 equity shares of rupees 10 each fully paid. Pass the entry to record the share capital reduction account. So the reduction was made by converting 50,000 preference shares of rupees 20 each fully paid to the same number of preference shares of rupees 15 rupees per paid, and converting 50,000 equity shares of rupees 10 each, in which the 15 paid up 50,000 equity shares of rupees 10 each fully paid. In the books of journal entry, old preference shares capital account data, old preference shares capital account data to new preference shares capital account to capital reduction account. Listen. So the reduction was made by converting 50,000 preference shares of rupees 20 each, but fully paid. The shares was issues 15 rupees each. So 5 rupees reduction, 5 rupees reduction. Old preference shares capital account data 50,000 into 20 to new preference shares capital 50,000 into 15 to capital reduction 50,000 into 5. So 50,000 into 5, 2 lakh 50,000. 50,000 into 15, 50,000 into 15, 7 lakh 50,000. 50,000 into 20, 10 lakh. Being preference shares of rupees 20 each is converted into preference shares of rupees 15 each. The next, old equity share capital account data. Old equity share capital value rupees 15 each. So by converting 50,000 equity shares of rupees 20 each on which 15 paid up to into 50,000 equity shares of rupees 10 each. So paid up value you have to take 15 rupees per share. 15 into 50,000. 15 into 50,000, 7 lakh 50,000 per day. New equity share capital 50,000 into 10, 5 lakh. Balance capital reduction being equity shares of rupees 20 each, 15 paid up is reduced to rupees 10 each fully paid. Then capital reduction account data 5 lakh, profit loss account 2 lakh 10,000, to plant and machinery 90,000, to goodwill 40,000, to investment 80,000, balance capital reserve account being accumulated loss and sundry assets right written off and balance transferred to capital reserve account.